Hi, this is Ravi Gupta. I am CEO and founder of Elets Technomedia Private Limited. We are a 17-year-old organization and we have been working in the field of innovations. We bring out four unique magazines. Sorry. Our magazine in the banking sector is called the Banking and Finance Post. We have a magazine on health, it's called eHealth, another magazine called Digital Learning, and another magazine called eGov. Now, these are unique magazines, and we have been looking at how do we document the innovations in these sectors. And also, we keep on organizing several conferences in and around the country for last 17 years. We have organized more than 300 conferences and workshops in more than 70 cities in India and more than 15 cities outside India on these sectors in which we publish the magazine and related sectors. Today, we are here with an eminent panel with us. We have this topic is on Fintech Collaborator or Disruptor, and we are going to talk about the situation of the fintech sector post COVID-19, during COVID-19, and of course post COVID-19. How this pandemic is going to impact the fintech and overall BFSI sector holistically. So in the beginning, I'm going to request each of the panelists to kindly introduce about yourself and your organization briefly, and then we start the panel. So I will start with Karpe.
Thank you, Ravi. Thank you for inviting me to be part of this wonderful panel. I'm delighted, looking forward to sharing my thoughts. And more than sharing, I'm looking forward to learning a lot from the panelists, including my friend Samir, with whom I have been on the panel before. Allow me to introduce myself for 2 minutes. I'm a partner in 100x.vc. We are an early stage venture fund. We fund early stage startups. We believe in becoming the first institutional investor in the fund. We invest through an instrument called iSafe, which is simple agreement for future equity. It's a pioneering instrument in India. We did invest in 20 startups in December. That was class 1. We got close to 1900 pitch decks and we selected 20 to invest. And we're now looking at class 2, where we'll again invest in another 25 companies. So yes, we look for early stage startups. We are a discovery platform. We have invested in fintech related startups in the class 1. And I'm looking forward to an engaging conversation.
Excellent. Thank you, Nina, for joining here. I hope you can give a VC perspective to the whole
Sure.
discussions here. I can have Shiju from IIFL Finance Limited. Could please introduce yourself.
Hi everyone, good afternoon. I know this is a situation where we are all inside the houses and looking out when this gets lifted up. So I think this is the time, pandemic time, when everyone is learning and thinking what to do next and what will going to be happen on the next. So I think this platform and this discussion is very useful to discuss this out, what we'll have to do in the future as well, what we have to do in the future as well. And I think it's a need of the hour where we have to think through of a lot of digitalizations. Till this time we were talking about digital platform, digital transformations, but I think this is the time now what we have learned from hard times by putting that all thought into realities. And obviously the fintechs will be a next game changer for all these scenarios to overcome in future. Since this has happened this time, it doesn't mean it will never happen in future also. So this is a big learning for us. Not only from the geography perspective, from the global perspective, if we see no single location is being spread out. So we cannot plan any of the disaster from the geography side now. So we have to be more enthusiastic to get these things in place as soon as these things get lifted out. This platform, I'm also looking for learning from my seniors and my co-peers who are there in this platform. I think it's a more from learning and sharing the understanding and the current knowledge and the going through activities from our side. I'm looking forward to hear from this group as well.
Great, Shiju. Thanks for joining us. I have Vikram Shah here from Vested Finance.
Hi, thank you, Dr. Ravi. Just a quick correction: it's Viram. It always gets replaced as Vikram by default. I'm used to it. No problem. But thanks a lot for having me here. It's a pleasure to be here with all the other panelists, and looking forward to bringing the fintech perspective onto the table. So I'm part of Vested, and at Vested, what we're doing is, so we are a US registered investment advisor, and we're working on simplifying international investments, so US stock market investments for investors from India. What we've been able to do is create an online paperless process, as well as a very simple way to open a direct brokerage account into the US, get started investing commission-free fractionally, and simplified the fund transfer. So the basic thesis for us was that we are using a lot of these brands. We are very familiar with the global companies, but we've never been able to participate in their wealth creation. And how can we simplify that? So that's a little bit about Vested, and looking forward to the discussion.
Great. Thank you. And Viram, right? Viram?
Yes, perfect.
Perfect. Thank you so much. Samir, please introduce yourself.
Thanks, Samir, for inviting me. I work for this company called The Digital Fifth. We are into three spaces largely. We are in first is fintech consulting. So we help a lot of early stage startups to grow up, scale up, help them in partnering with banks and NBFCs and brokerages. So that's one side, pure consulting. We also work with leading financial institution banks as well for doing their digital transformation as well. So that's one side, which is consulting. Second is pure partnerships. So a lot of fintechs have challenge in reaching out to banks and others, right? And for whatever sake, I have 25 years, I have just done one thing, working on banks and large technology companies. So I have networks. So we do a lot of business work. We are not primarily focused on investing. I think that's 100 VC does 100 times better than us, or a million times. But we are primarily focused on getting business in. So typically we help in revenues for people. And once revenues come in, I think investment can happen. And third is we do a lot of training. I think we started with the fintech masterclasses almost 3 years back. Now we do open banking and many more things. So I think from a training perspective, anybody's sort of looking at fintech and open banking and starting off, I think a lot of entrepreneurs in the country, early stage, late stage, have sort of been part of our training sessions. And that's what we do. So this is all we are, consulting, partnership and training, and all focused on fintech. So looking forward for learning in this session. And I think while there are all negativity are there, I'll try to focus just on positive things, because for negative, there are enough guys and more foreign media out there to sort of say everything's down. So only positive stuff.
Fantastic. Samir, thanks for highlighting that you are going to only speak positive, but the first round of the panel is about the challenges emerging out of this situation, the COVID-19 situation. You may call it negative, or you may say it challenges, which may mean the same thing. So what are the challenges for the fintech sector or overall BFSI sector in that perspective, larger perspective, due to the emerging COVID-19 situation? So let me start with asking Nina.
So COVID is, it's a small microbiology virus, and it affects all people irrespective of caste, and so also it affects all industries irrespective of the sector. The entire economy is going to contract a lot. So obviously it will have an impact on the financial services sector. There will be stress in a lot of borrowers, and the sector will have to figure out how to ride this entire couple of months over the next 3 to 6 months or 12 months, whatever time. They will need to ensure that they have an eye on both liquidity and solvency. At this point of time, people are really more concerned about liquidity. Eventually, solvency will also become important. But these are a couple of challenges which the sector is going to face in very, very brief. I will talk about opportunities later when you want me to talk about them and what are being thrown up there. So yes, stress in the system, ensuring liquidity and solvency in the short term is what is critical.
Shiju, your perspective on the challenges of the sector.
I think definitely there will be challenges, but it will be a temporary phase. If you see the complete economy, it's not only from the BFSI sector, it's all the sectors which have got hit badly. It's a temporary phase, and we all understand, because it's not a recession. It's just a cause recession because of the complete industries has been stopped operational. Otherwise, if you see, it's not a recession from the economic perspective. It's a temporary phase. If you see over the last couple of decades, the crude oil prices have not gone similarly down the way it is happening today. So I think it's just a periodic phase period. Obviously, there will be stress in terms of more in terms of liquidity. There will be a potential NPS which may happen over the next couple of months. There are a lot of packages which the government is also pushing it up in terms of reviving those economies, and I'm sure there will be more packages which is expected on the way over the next couple of weeks by seeing the extension of these lockdowns. So it will be a temporary phase, obviously, but there will be challenges in terms of new initiatives, new projects, or new budgets. So, but we all have to be very patiently, and we have to watch what's going to happen. But this is the phase really someone to prepare themselves and gear up for the next move, because after every fall there will be a upwards also. So I think this is that phase where we have to prepare ourselves and keep ready for the next jump.
Thank you. Viram, your perspective on this situation.
Yeah, so I think for us, the biggest challenge from an operational perspective has been to stop whatever we were doing and kind of reprioritize. And being able to do that as fast as possible was one of our key challenges. And so we kind of, I'll take a more operational perspective from running a fintech. And we broke it down into 3 buckets. One is employees. Are we ensuring that our employees are healthy, and are they being able to be productive or not? That were 2 of the challenges that we faced internally. On the other hand, we had also, we looked at it as business challenges. Will we be able to continue our growth, or what are the priorities that we need to set for ourselves? So in terms of prioritization, where earlier we were constantly running after growth, we shifted overnight sort of to cash conservation, revenue generation, and then along with 1 and 2, can we sustain our growth? So growth kind of became third in that priority list. And so that's where the key challenge was, to shift all our planning in terms of products, in terms of things we wanted to do, keeping those lens in mind. And the third challenge, I think, for us as a startup was on the fundraise environment. And I think Mr. Ninad is much more well suited to be able to answer that on a macro level. But at least from what we have seen running a startup, is that early stage sort of has not dried out, I would say, but decision making we have seen has become slower. Whereas people have a lot more time to engage and have conversations, not being able to meet is a significant barrier there. It's not all online in the fundraising world, unfortunately, yet. And so raising the next rounds of funds for startups like us has become a little slower. And so then accordingly, we've had to readjust and plan our financials and cash flows accordingly.
Excellent. Viram. Samir, your perspective.
I think
Challenges.
Challenges are enough. I think enough if you look at on payment side, very visible that people are not transacting as such. So while we talk about cash reducing, actually digital also is not expanding as fast, right? Because the needs are down. I'm just looking at till now how much money I've spent. I think I would have spent maybe $2,500 in 2 months. That also on food, right? And that also specifically subsidies, right? Nothing else. So the needs are not there. All of us spend random money on movies and stuff like that, and that is off. So logically, the payment side is obviously not doing great. But while we talk about this, I think the people are getting trained on pure digital transactions, right? So they are forced. And I was reading that I think UPI net new users have dramatically gone up, which is again good for it. So I think long-term impact positive. but short term, there's definitely contraction even on payments and everything else. Moving to lending side, I think the worst hit right now. That also, those who are very short-term lenders, extremely short-term lenders, payday or maybe 3 months kind of lenders, both in SME and the retail side are the worst affected because the cycle, the loop is broken. And many of them may not have a way to sort of collect, and that will become a sort of long-term NPA. If you're giving money to a gig economy, how do you collect? Given that the guy is already walked back to his village, and he may not be interested in that business anymore, right? So that's one side of it. I think wealth obviously has a bit of contraction seen, but I think overall, I think if somebody will come out much stronger and much better will be two industries. One is pure play wealth tech, I think, because people have more time to read through their statement and figure out where to invest, reallocate, and all of that. The second is insurance, because the scare factor is very high. Everybody's writing their wills now, so I think insurance will sort of pick up. And last but not the least, anybody who's doing a B2B business is in great shape right now, because B2B will grow more than anything else.
Fantastic, Samir. I think all of you are very, very eager to talk about positives of this situation, the emerging opportunities. But before we get there, I want to raise this issue that several of the leading organizations have IMF, World Bank, several other estimates have come. Some are saying that India will grow at 1%. Some, like yesterday, I read a report called India will grow at 0%. And today I was reading a report where it was said that India will be growing negatively this year. So last 9 years back, we are talking about 8%, then we go to 7, 6, 5. And then suddenly we are going to hit 1 or 0% growth. And so is that a concern from a BFSI and a fintech industry perspective? Ninad, your views on this?
So the economy will contract. It was expected to be in 5.6% range. Hopefully it will touch 2, which is just about okay for India compared to the rest of the world. So that challenge is there, but India is, still a lot of fintech plays still there. It's so much population unbanked, so many needs are still not yet fulfilled. So let us look at the positive sides. Positive side, there's still a large market waiting to be tapped. I would like to believe that India is the biggest laboratory in the world for fintech companies. Whether you talk of depth of opportunities or breadth, nowhere in the world we've got mix of the old and the new and the mobile and everything else. Having said that, and the number of people, so there will always be opportunities. But broadly speaking, we are seeing huge change in work style and lifestyle, massive changes. Work from home is now reality. So we are again having this seminar of working from home. We are seeing a lot of changes in consumption patterns. We are seeing a lot of interest in, obviously, the number one priority is now health and hygiene. So all this habit changes taken together, what are the opportunities for fintech players? I think if you're in the fintech industry now, you need to figure out, does your model have a delivery at home model, where the consumer does not have to move anywhere and you can do it straight delivered at home. So accordingly you have to change your go-to-market. So, there'll be a lot of talk of neobanks for a long time. Physical will be avoided for a long, long time now. People will just avoid physical. So again, there's an opportunity now to break out into some neobanks. MSME sector will get into stress. Gig workers will get into stress. But if you're smart, if you're able to lend correctly, if you're able to identify the correct all-weather companies, you can turn that to opportunity. So these are some of the things which are opportunities. Overall, if you are in any consumer B2C business, Samir did mention that B2B business is not a problem, and I agree with him. B2C, if you're there, you will never get your entire consumer base sitting at home. So it's very easy to target. You have to figure out a model of how to target at home. And what will happen is when all these things, this is bound to be totally normal at some point of time. And whether it takes 12 months, 24 months, 6 months, 8 months, at that point of time, Samir will become what we call a revenge spender, revenge customer. Those are customers who have not spent money. He has spent only 2,500 and everything is normal. He spent 25,000 in a single day. So, this is the opportunity you have to wait for when all these revenge customers come to the market, and fintech guys are there, hungry. These guys are hungry. They have been sitting at home for a long time. They will come and spend a lot of money. So I would say these are some of the opportunities which I think are available at this point of time.
Shiju, your thoughts about opportunities in the context of the drastically reduced GDP growth?
I think it's a temporary phase for the reduction. We are hoping for a big jump after this pandemic gets over, because there will be a lot of demands. Since people are at home, there are a lot of food for thought what to be done next. I think there will be a lot of ideas which will get created out of. Once we have a potential ideas which is going to be a conceptualization mode, I think a lot of funds will be needed, and that's how the lending organizations will come and play a big picture out over there. So obviously this doesn't mean it's all end. There will be a huge demand now, and it is the time and period when everyone has to strengthen their arms and be ready for their infrastructure plus their potential capabilities to disburse those sort of lending demand. Obviously, the mode will be changed now. So till this time, we were all thinking about the branches, opening about the new locations. Now it's all will become virtual, and everyone has been experienced this sort of working and operational forcibly. So there was a lot of discussions, and every time in the board meetings also used to be discussed about the BCP plans and all, working from remotely, working from home and all, but it never used to get conceptualized. But time made us to work within couple of hours, and I think it's working out. A lot of institutions are operating now from work from home, and many of them has arisen whether do we really need a real estates now to operate the organizations. So I think the operational mode will change. Touch points will be lesser. It will be more from the digital platforms. Fintech will play a big role out over here. Till this time, the fintech was only talking about from the BFSI perspective, but now it will be from each and every angle perspective. So fintech will be one of the big game changer in complete economy stuff now. So I think it's a temporary phase. We have to be very positive about these things, because obviously there are a lot of research and everything is going on behind of this pandemic, and I'm sure it will get over very soon. And we have to be back in action with all full force over the next couple of months.
So, Shiju, how temporary is temporary?
So today, when we talk about the temporary, we don't know about the timelines. It could be for 2 months, 3 months. So when we started the lockdown, we said about 21 days, but we never knew what the 21 days will bring it out. So obviously, the thought was that 14 days, the chain will get break. But obviously, there has to be a lot of discipline within the people also. So next 21 days also has been 24 days, which has been increased. We don't know whether it will be 24 days or whether it will go more. So obviously, it will take some time, because this is a pandemic. If you see from the histories also over the couple of years back, 100 years or back, when the pandemic has occurred, it says it has sustained for a couple of years. So obviously, the medical facilities have been so emerged and so new at this point of time that we may not have to wait for years. It will be a couple of months. But obviously, we will also have to be supporting to get rid of this, breaking the chain at this point of time, and move ahead out of this pandemic. So we will have to obviously wait for a couple of months, but it's a matter of 12 to 24 months when the economy will revive back and will be in a full-fledged boom.
Great. Viram, your perspective.
Yeah, so I think I have two kind of points. One is that the atmosphere seems quite opportunistic or positive because of the sentiment, at least that we have seen across the BFSI industry, has become positive. So if you kind of look at the graph of sentiments, immediately when the lockdown came in, everybody was in the graph was diving deep into the negative. Everybody was super unsure what is going to happen and how things are going to move forward. Over the last couple of weeks, what has happened is people have set their expectations as lockdown being ground zero. Like, that is assume that's reality. Let's see what we can do above that. And so that shift in mentality where, okay, we don't know what's going to happen versus let's accept this, what can we do beyond that, is what is leading, I think, to the positive environment across different companies. Whenever we talk to somebody, work is still happening and people are okay now accepting this as the new reality and trying to move forward, pursuing new business opportunities. So that's one. And the second thing that at least my opinion in the next 6 months, how businesses will fare will kind of depend on what kind of target segment that they are going after. A crude way, at least that I look at it, if you're going after a sort of a more affluent base, there is likely that people will see as soon as things are back to normal, because they have in fact lowered their discretionary spending, right? People are not spending money like they used to earlier, so they have more money to spend, and that might lead to a strong rebound in the next 6 months or so. However, if you're targeting, say, the underserved population, the population that struggles to make even ends meet, I think their priorities will have shifted for the next 6 months. They are not likely to look at spending additionally where they used to earlier, or thinking about, okay, I want to open a bank account when I can't figure out how I'm going to survive for the next 6 months. So I believe that it depends on what kind of segment that you're going after, and that's how the impact will be seen on different businesses.
Yeah, Samir, how do you see the situation in terms of opportunities?
I think the worldwide fintech movement happened only when in 2008 the entire world was under trouble, right? So I think the price point, the structures, the innovation needs are different, right? Now innovation needs are much more. Then again, look at after demonetization, suddenly the needs were different, and therefore Indian fintech ecosystem even grew much more. So my take is like this: maybe this is the third big wave, which will ensure that digital business will increase. I'm not calling it fintech because a lot of banks will also and large NBFCs will also take that wave. So it's if I look at it, a lot of bigger entities where the CEOs and board were always focused on sales number, they have time to put the right strategy in. And my gut feel is that they will also sort of join the whole game, be it on their own or be in partnership with fintech. So that's a larger thing. So if you are in lending, you will be able to do a good business because the needs are still there, right? It's not that after 1 year needs of lending is not there. So all of them are there. Customers for much more trained. Payment side, I'm sure whatever numbers, I'm not a statistician, but I guess whatever numbers are looking at digital payments, if we are an X number, the number will be at least 3 times X in maybe one or 2 years down the line, because overall business or overall transaction may come down, but digital will increase. Digital will increase on the lending side, payment side, wealth side. All segments should see a dramatic change. Even insurance side, I think the changes will be there. So that's one side of it. Let's look at the other side. I think look at the cost structures. I think we are suddenly seeing a cost structure dramatic change, right? I'm unlikely to go back to my co-working space on full-time basis because we have learned the art of working from home, and I have learned it. I don't want to go back to add more to my cost. Second is, I think the expectation of employees for at least next few years will be different. I think there was a bizarre salary levels which were there in the market. That will come down. So the highest of the cost which we were always having, be it a fintech, be it consulting firm, which is what we had, was a huge cost on both physical and human capital. Both will change, and therefore the ability of people to price themselves better will be higher. The growth will be there on that side as well. So I think look at it. Top line will increase because the people are going to go digital, and the bottom line should also improve because cost structure will be lesser. Just to give you our own example, we are in consulting business, right? Logically, we are going to get hit much more because a lot of transactions which we do is face to face. And in some cases, did we see impact? Yes, but some of them are coming back with different ideas. A lot of our old customers who had taken our strategy are coming back again. Then if you look at partnership, a lot of guys from outside India and within India are starting business now because they are thinking that banks have more time. And our own training, which is open banking fintech, were full physical, 100% physical. Me being digital, have always done only physical classes. We are now only doing digital classes. And we are getting people from across the world, including from people from Portugal and Vietnam joining our sessions, right? Which we had never imagined somebody in Portugal will wake up at 4 o'clock to watch us out. We never imagined. So I think we also are learning through a journey, and therefore I am positive that we'll all recover faster than others. And again, one simple point, we think of headwind and tailwind. I think we have to figure out how to fly ourselves. Headwind, tailwind doesn't matter. Figure out how you can fly in this whole journey.
Fantastic. I think some of the panelists talks about why we need office space, so much real estate required, everyone can work from home. So will that decrease the real estate requirement for commercial or office purposes? When the GDP is down, the real estate sector goes down, and it might have a ripple effect on employment. Several sectors like malls are closed, cinemas are closed, restaurants are closed. So there's an overall decrease in the consumption, which is we all can see, and it may keep on happening for next 3 to 6 months. So just a question to when the overall consumption reduces, when people have started buying less and the transactions have decreased, will that affect this fintech industry or not? So, Vinod, your perspective.
So yeah, I'll give a quick response. I agree with Samir totally. The cost structures have now been reduced, and they'll remain at the reduced level. So we will all have companies which are lean and slim, and that will continue to be there. Yes, consumption has reduced. It has shifted, in some ways, to home consumption. So whatever, if your product is, let's say, through a distributor channel, you need to figure out how can you reach the end consumer directly in a home model at his or her convenience. So the consumption pattern has shifted. Overall consumption may have reduced because obviously you can't go to movies, you can't buy cars, you can't do this. But also reality, when you're sitting at home, you consume a lot more consumable. And again, when the whole thing goes back to normal, people are going to spend a lot more. Just to give an example of China, they opened up these places, and the first industry which has got a positive uptick is car industry. People have said, I don't want to travel in public transports. They're buying cars. And just to illustrate my point of revenge spending, Hermes, which is a leather bag industry, in one of the stores, they had record sales. In a day, they sold goods for the entire year once it was opened. So, these things, there is a lag. People will all have to wait for the lag. But yeah, it will pick up again.
Your perspective on this consumption story, whether is the consumption going to decrease or increase, and how will it impact the fintech industry? Shiju.
I think it's a temporary phase where the consumption has gone down because we cannot come out of our consumption expenses behavior. So we were doing and expending so much till this time. Over the last 25 days or 30 days, we have been handcuffed because of the environment and the situation. But it doesn't mean that we will not spend. We will obviously spend. This is just a matter of time. And today, if we talk about, since theaters are not operational, but there are a lot of online content which we are watching. People are using high content. So obviously, theaters, it's not the way the theaters are operating, but the movies are still being watched. And through the contents, everyone is earning also. So obviously, the pattern has changed, and there will be more digitized touch going forward. But as Ninad said about the revenge spending, there will be. And obviously, once the market is streamed back, we will talk about this like a history. So it will be spoken about something like once upon a time. So that pandemic. So I think there will be some movies also on that, which everyone would like to watch about, and we'll see how we have spent the days at our home, which we couldn't do it. I think it's a temporary phase, and it will get over very soon. And being positive at this point of time will only help us to come ahead out of this. Otherwise, negativity will kill us. and
Of
negativity
course.
will kill us the economy too. So be positive, stay safe. That's the only thing what we could think about at this point of time.
Viram, your perspective on the consumption story.
Yeah, I think I agree with what Mr. Shiju and Mr. Ninad largely mentioned. Is a revival in consumption definitely seems likely. What is likely is happening, it's accelerated change in consumption patterns where things are moving online faster than they would have earlier. Something would have taken 5 years. Now schools and colleges are moving online much faster than we would have imagined that. And so just a change in pattern is something that is very likely. However, as things come back to normal, consumption return is something like the other day I was speaking to one of our advisors, and they just mentioned that treat this as 1 month of your year on vacation, and 1 or 2 months of your year on vacation. As things come back to normal, uh, things will ramp up pretty quickly.
Samir, your perspective.
Okay, I think we will always look at consumption from a commercial value directly perspective, right? So we look at how much have we bought. I think let's look at uh, the way customers are consuming is different, right? So they are largely going to consume only in digital way. So I think in our mind we were always thinking how to become a Uber of this business and Uber of that business. I think I'll say we have to figure out how to become a Zoom of this business, right? Whichever segment we are, we have to become Zoom of that, which is somebody can consume us wherever they are. So consumption is going to go up in that sense, digital sense. And fintech is largely a digital movement, right? I don't think fintech has any other movement rather than digital movement. I don't know when we think of fintech and we think that it has to be manually delivered. Any which way, banking industry or maybe fintech industry is the only industry where we deliver nothing, absolutely nothing we deliver. We neither take you from that place to this place. Neither do we help you in watching something. We only move money from one place to another in an accounting entry which nobody can see. A loan can be entry or a wealth can be entry, right? So in which way we deliver nothing. So the movement is opportunity and all the consumers is towards digital channels. So to that extent, I think we are in sort of good shape. I'll turn the question around for myself. Okay, so to be honest, why I'm only talking positive is because on day one when it happened, I was actually thinking that maybe I have to wind up my shop. Okay, it is factually correct, right? A lot of us have gone through first 1 week when 2 of your key customers and come back and say, yeah, I will slow down. Let me reduce my burn rate with you because I don't know which way we'll go. And then you say, oh shit, if everybody goes in that direction, what happens? So I've gone through it, and what I realized is that if you are positive, some new venues will come, and the customers also coming back, right? So I think everybody has been in the wave of shock. I think first 2 weeks, though, I think some of you would have always thought that, yeah, the movie to nahi chal rahi. Is it a movie which is running, which will come back next day morning and say, what the hell, what is happening? Right? So I think we've gone through it. Just play along, and we will all win in this journey, I guess.
Great. What I will ask about is that I think Samir mentioned about like everyone one has to become Zoom of the business, like in which you are operating. So Ninad, since like fintech deals with each industry, each sector, you have to do a transaction. So which are the sectors like which are going to go up and which are the sectors which are going to go down? Like someone mentioned about that consumption pattern will change. So people are going to watch movies. I was like reading an interview of a film director like yesterday, and he said, I don't see that movies are going to, the movie halls are going to be open in next 6 months because of this scare, and people will watch it online. So which are the industries which are going to grow and which are going to decline? Dinath, if I may start.
So India has 65 million micro, medium and small scale industry. 65 million. It's a staggering number. No one else in the world has such a large number. Most of them, if not the majority of them, have not embraced digital. Small guys have refused to embrace digital. Now they are forced to do it. So you will suddenly have, let's say, 64 million out of 65 million going on the digital platform. What will that lead to? Amazing demand for digital services, including digital payment services as part of that. So I am very, very gung-ho about, this entire lot of people who have never gone digital now realize digitize or die as the mantra. So that's a broad horizontal spectrum. The other in principle spectrum are industries which can deliver products and services at the convenience of home and which can be consumed at the convenience of home of person with least physical contact will do well. So fintech actually falls in that category. As Samir mentioned, fintech deliver nothing, but yet we pay fintech people, right? Yet we pay people doing that. But on a very specific, if you have to ask me specific sectors, let's say healthcare will obviously do well. Health and hygiene will become very, very critical, whether it's sanitation, whether it's, immunity building, all of that stuff. Education and training obviously is all going to move online. Content, there'll be great demand, data networks. So a lot of these things are natural to have short-term demand, and that short-term will remain permanent. It will become mainstay because habits are going to change. So that's my brief response.
Yes. Shiju, your perspective.
I too agree with Ninad. I think it's more the digitized channel which will get focused more and will get increased more in the near future. Every sectors will see boom. Obviously, their delivery models will change. So, for example, when we used to buy the vegetables online, people used to laugh and make use of that why you are buying it online,
Yeah.
because the vegetables will get delivered only after a day or two, but it will not be so freshness when you get it from a vegetable shop nearby. I think that's the way the things will move on. If you see the medicines also, which we recently started getting online, we used to make fun of that. Why we used to buy online when we get it on the shops? But obviously, the time has made us to learn hardly. With schools, we used to have a lot of contents from the educational perspective online, but we still used to prefer for the classes to go. Now things will become more online. Movies are all moving towards the contents now. I think every channel, for example, the all e-retail which are there, it will all move towards doorstep delivery. I think digital will play a vital role out over here, but every sector will get boomed up. But obviously, there will be some sort where we will have to go, which will not be able to buy in online. Say, for example, oil or petrol or diesel. We will have to go to petrol bunks and we'll have to get physicals. But given the current scenario, I think mode of operations will change and will adopt more digital. But the way it was there, the previously will also keep continuing. But there will be a boom back everything. So, after every Sunday, there is a Monday. Obviously, these are Sundays which we are living in right now. We will be coming back on the Mondays with our own all daily routine lives and the rush life. So obviously, every field will see the boom in that.
Yeah, Viram.
Yeah, I think so. My perspective is more on just particularly fintech and wealth, and in that we are seeing a couple of trends that are coming across, and largely the function of everybody being online and having a lot of time to consume information. And so one is the fact that people are educating themselves a lot more than they used to in financial services. And so we are seeing a heightened interest in particularly financial services products, especially that can be delivered online, and as well as heightened interest in education or financial education, where people have time to actually, when they never used to get time in their daily work to sit and learn about the stock market, how investments work. Now they have the time to sit down and reflect on how they should save, how they should create their portfolio. And so that education piece is something we are seeing a lot of interest in. And thirdly, as a function of this time to educate themselves, we are seeing heightened interest in products that people would not have earlier tried out because they had a sort of a learning curve. For example, complicated derivative products. A lot of people did not understand options and sort of used to stay away from it. But across the world, in fact, we are seeing that a lot more people, especially students, are more interested in derivative products, want to try out options and see how that works. So that's one thing. Also, products that, like, for example, for us, US investing, something that required you to learn about it, how it works. you would not have the time to do that earlier. But now people are much more willing to attend webinars, read a little bit about it, and then get started on that journey. So I think people will definitely become savvier investors after this entire period.
Samir.
I think while we have spoken a lot of areas, I think I'll look at EdTech as the one segment which will dramatically go up. We ourselves have been in training, and we never thought of that as a main line of business. I mean, we would never we would always look at ourselves as consulting guys. But I think training has been doing well for us. We never took it seriously because we thought of it never as a full-scale business, right? But now, given the current scenario, I think the way we are doing is one of the co-founders is going to lead the complete EdTech business of ours, right? So that's the thought process that EdTech as such will dramatically go up. We are also surprised at the kind of intake which is happening, right? So that's one side. Second is from a usage perspective, I think all collaboration tools, including Zoom to anyone else, and I hope there is an Indian version of Zoom as well somewhere. Because if you look at it, I could never train myself on things like a Slack. Honest answer, okay? I'm not feigning anything. I could never use Slack. I could never use Asana, and I could never figure out any of these tools for collaboration. In one day, with a head hit hard. Next day onwards, I was full online. I could never use the entire team on one cloud to ensure that the document versions were in the same place. All of them is taken care of, right? So it's one day, one hit, one problem statement, and you are solving it for sure, right? So I think these segments will do well. I'm only worried about things like maybe travel for sure. I'm damn scared. I would not travel for many months. My gut feel. And also from a staying perspective, one is travel, second is stay. I think I would be very scared of going back to a big co-working space. I would rather go to a smaller one where there's a chance of interacting with more people. I think these are the places which I'm really worried, which is all coming back to real estate. Wherever there is real estate, I think there's trouble ahead. And the positive side would be, I think the traffic on the road will be much lesser, I guess. I hope so.
Yes. So we can now look at like some of the questions which have been raised by the various audience. Okay, so there are like 6 of them. So Ninath, you can pick one and answer.
Can you let me see if I can select one. It's in the chat, no?
Yes. It's on the on the Q&A option. So I will request all the panelists to have a look at the questions and select the one you want to answer. So should I read it? First question is about how fintech collaboration will help banks in overcoming the challenges created by COVID-19.
So maybe Samir can respond because he deals extensively with banks. While
Samir.
looking at the question.
I think it's a both sides story, right? So from a bank to sort of build their own whole framework around, let's say, a digital lending or payment, I think it's best to right now partner with something which is already created by someone. So bank side needs are very high. Today, if you walk into a bank and say, I can help you with digital lending or maybe digital payment and lending, they will not start business with you immediately because everybody is doing right now almost zero new to credit right now. But I think after a few months, they will want to use that out. Anybody who can help in a sort of automatic backend processes. I'm not even going to AI/ML. Anybody who can help in the RPA side of it, process automation side of it. Anybody has a great LOS, LMS platform. So anybody who can actually simplify the journey. Maybe there are platforms which are built to sort of aggregate on both sides, a bank and a fintech. So there are layers. I think, for example, today, one of the startup which is in that business called Setu has got massively funded, right? So anybody who can bring these two guys together will be sort of very powerful. And opportunities are huge. So today, more than ever, I think we see the intent. Typically, I will be honest that when you talk about digital to a CEO of a bank, he doesn't feel that, I think somewhere his ego is hurt when we talk about digital to a CEO of a bank or a board member. They want to talk about business, revenue, top line. They don't want to talk about digital at all. My gut feel is going forward, digital strategy and business strategy will be exactly the same. Just one. I used to be a digital banking head 20 years back, and we used to call it alternate channels then. I was an assistant manager. Nobody looked at me with seriousness, right? We were doing the same thing 20 years back now. It's just that it is getting more and more elevated. Now, board has to answer why they are not able to do any business. So I think when they are answered why they're not doing any business, they are coming with digital answer. I think I have seen 2 ads from 2 banks, small finance banks, saying they are open for business on digital channels. So I think you should see more movement.
So Ravi, there are 2 questions on startups. Maybe I'll take them and then others can.
Yeah.
There is one, very last one I'll go first, is Satish Kumar. He's saying, how do you see the VC and funding in fintech space at this point of time? Viram had also mentioned earlier in his presentation that it's a little slow responses. People are listening but not responding. The short answer is yes. The responses will be so slow for some time, but no one is saying they're not going to invest. So it might be a little slow, but if you're a founder, you need to keep continuing engaging with the investors. They will certainly invest soon. And if there's something which is positively impacted because of crisis, funding is not a problem. So investors are looking for funding. One question is, how can the government ensure security concern for startups in the current? What I'm understanding, security as in work security or job security must be that. Startups have no security. The mortality rate is high, and when founders do startups, they have to be prepared for it. Is there anything else connected to VC startups? I'm just going through scrolling them. I think there's just one more, and after that, my other panelists can take it over from there. How fintech startups are collaborating with digital payment space. Samir can add to this, but there's a whole lot of opportunity which is there. I mentioned in my initial comments, whether it's payment platform, neo banking, digital lifestyle changes, a lot of them. So there's a lot of changes. I'll leave the other questions to other panelists because I don't see anything connected to VC or startup.
I think one question what I see from the NBFC perspective is, what opportunity do you see pertaining to fintech collaboration with NBFCs? Obviously, there are a lot of new thoughts which are arising now from origination till closure. I think there are a lot of channels which are there where fintech can play a vital role. Till this time, all the NBFCs were focusing more from the touch points across with the customers at their doorstep, but it was through the physical way. I think that will move out. Fintech will play a vital role in terms of originating, decisioning, lending, collections, and till the closure for the complete end-to-end channel mechanism for the NBFCs. I think there are a lot of bigger scope for the fintechs, and there will be a lot of fintechs which will have to come up as a startups post this pandemic to help the NBFCs to overcome those challenges in terms of disbursing and collections and lending. So that was only from the NBFC perspective.
Viram, you want to?
Yeah. Sorry.
Yeah, you want to answer any of the questions?
Yeah, I think I saw one on COVID-19 being a curse or blessing for fintech. I think we discussed at length about this. The general consensus is that some sectors in the fintech space are likely to be adversely affected, especially in the lending world where things have kind of halted. However, overall, as a business perspective, it's a great opportunity for a lot of the excess fat in businesses to be cut down, become more leaner and more efficient in operations. Sort of salaries to come down to more realistic levels, where earlier there was a talent war constantly in the fintech world as startup after startup was getting funded. And lastly, for people to focus on generating revenues and ensuring that they're cash efficient and sort of running more efficient businesses. So definitely an opportunity for a lot of fintechs to convert themselves into longer term sustainable businesses.
So I think we have looked at all the questions, and we can almost close the panel here. And before we do that, I will just request each of the panelists to just give a one-line summary, about the current situation and the opportunity ahead. So I will like go in the reverse order. So I will start with Shiju.
I would only request everyone to stay home, stay safe. This is obviously a tough time from all perspectives, but we should be more happy that we are getting enough time with the family. We are getting enough time to think through what we need to do next. And I think India is doing quite good in terms of numbers. So the numbers are increasing in terms of the exponential numbers in terms of the patient level. But if we see, the India has taken a drastic steps and drastic decisions, lockdowning self at the numbers when we were 550, wherein many of the countries are now into a bigger mess state where they took a drastic steps. So I think we are in a safer hands. Government is taking a lot of steps. We should cooperate with the government statutory bodies. I think staying safe and staying inside will be the only materializing medicine for this pandemic at this point of time. And I think being positive also will be one of the biggest things. So learning new things, learning a lot of new concepts will help us to come up with the new platforms post this pandemic. I think stay safe and stay home.
Okay. Thanks, Shiju. Viram.
Yeah, I'd echo what Mr. Shiju said in terms of staying safe. Please definitely take care. This is something that the entire world is seeing and facing for the first time. And there's a lot of uncertainty. So I think everybody who's involved in the business world, at least planning for different outcomes becomes one of the key things, and kind of understanding what probabilities there are of each outcome working out and trying to pick the best path. I think previous crises have given birth to businesses the likes of Google and Uber, and Google.
Thank you, Viram. Sameer.
I think two views. If you are a founder of a startup or wherever you are, I think it's important that you run hard, faster than any time ever. Thinking has to be there. New business opportunities have to be created. So I think there's no time to look back and saying, what was I doing? Maybe if you're doing maybe 2 million, 2 lakhs, whatever the number you are doing, and don't compare it. I think where you are, I think you have to run forward. There's nothing else. It looks like a Gyan. A lot of guys say this Gyan. It's not Gyan. That's how it operates. Positivity is the only way to work. If you are negative, don't even start your business. Kill yourself. Part two, I think from an employee perspective, I think a lot of guys, honest about it, a lot of guys will actually get laid off. This is a reality, because as a lot of entities have to sort of remain relevant, they may drop people, put people on furlough and others. I think it's important that people become relevant, not just by watching Hotstar and Netflix to be with their family. I think they have to add new skills, add new structures, because if they don't, the risk levels are very high that you may not come back to a normal state, because the job size and job scene will actually keep contracting for at least 6 to 9 months, maybe more. And if you are relevant, I think you will do better than others. So be relevant right now is more critical than anything else.
Fantastic, Sameer. Ninad, I think you had to close this session.
Be relevant, Sameer has said. Good, very good. So let me put some relevant comments. The challenge is a lot of us have not seen a pandemic on a global scale. So obviously that's a big challenge. The solution to that from a business perspective, I have given 3 C's, as I call it, 3 C's. One is conserve cash, second is cut cost, and third is collect receivables. And what are the opportunities? I think one has to be on the top of this wave. The world has changed forever. The business world has changed forever. All these trends, whether it's health hygiene, work from home, less travel, all are going to throw up opportunities, including the fintech industry. Winners will emerge. Are you a winner? What does it take to be a winner? Remain on top, remain relevant.
Absolutely.
Perfect. Great. I think I love this 3C stuff. Very important. And Sameer, you said about being relevant, very important. Shiju said remain positive, very important. And Viram, I think he was talking about huge opportunities in the new businesses emerging. So thank you all the panel, and thank you all the audience. This video of this panel is available on the Facebook live on the Banking and Finance Post handle. Please go and like it, share it, and let these ideas of positivity be spread as much possible. So thank you all, and stay home and stay safe, all of you, all the panel, all the audience, and thank you all. Namaskar to everyone.
Thank you.
Thank you.
Thank you.